Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of How to Use Bollinger Bands in Real Life. Ladies and gentlemen, how are all of you fine folks doing today? Got a lot of you here live in the webinar. If you're watching this in the future on the recording, thanks for watching this video. I appreciate it. Got a lot of new faces here, a lot of new names, and some not so new names. Pat Coffin in the house, aka Trading Legend. What's going on? Chico Gomez, how are you? Kevin Resendez, Joe Ferrero, the one, the only Chris Albanese. How you doing, Chris? Hope you're doing fantastic, ladies and gentlemen. Gonna have a good class today. Chris found the chat pane, fantastic. If you guys have any questions, I have Angie Barbosa, aka the best moderator in the world, to help answer any of the questions that you might have today. This is an open and free discussion. You're welcome to chat about whatever you want to chat about. I think we'll have you in and out in about 58 minutes from right now. Absolutely max. I know your time is very valuable. And since there's not going to be any sales pitch, there's not going to be any fluff, we're just going to get into the dynamics of what is a Bollinger Band, what makes it exciting, and what I like about them. I think you guys will learn a lot. And again, if you have any questions, let me know. Type in a 1 if you can hear me, see my screen okay, and you're ready to go. I'm excited to see some prime numbers. All right, there's some 1s. Fantastic. Good. Paul, what's going on, Paul? Is this the first webinar we've had together, Paul? Your last name is almost the name of this. Bollenbach. Bollenbach. I like that. That's so close, right? Awesome, man. Well, glad to have you here, Paul. We're going to talk about Bollinger Bands. Let's go ahead and discuss what these guys are. But before we do, I'm going to throw a poll your way. Here is the poll. Do you use indicators? Let me open this poll for you. And for those watching the recording, I'll send it your way and let you guys know what everyone votes. Do you guys use indicators? Let's see what you think on it. And feel free to click on the little box that just popped up on your recording screen. Kevin says yes. Again, there's no right or wrong answer here. I mean, please feel free to submit however you feel. No right or wrong answer. We'll leave it open. I'll bring it over here for the recording students that are watching this via YouTube. If you're on our YouTube channel, feel free to subscribe, all that kind of good stuff. All right. Let's close this in 5, 4, 3, 2, 1. All right, closing survey. Oops, I think I closed it. Like, closed it. I wonder how I open it and share the results. My bad. Open. Oh, it's making me do it again. Snapdragons. That kind of defeats the purpose. Well, I can tell you what you guys saw it. Let me see if I can. Results. There's the results. 6:02 p.m. Okay, you guys might here. I can share it. There we go. I figured it out. Yay! All right, so 14% very rarely. 28% says yes, but only the moving averages, and then 35% say yes all the time. All right, I dig it. Thanks for the voting. I appreciate it. So you guys should be able to see the desktop again. Right on, right on. Let's go talk about some Bollinger Bands. Now, I will say as cleanly and plainly as I can at this particular moment in time, I would probably be one of those people who say, yes, I use indicators, but very rarely. I do teach indicators, and we're going to have another class next week. I'll send you guys that link at the end of class, and you'll get it. Those are probably my favorite indicators. And the reason I use this particular indicator, which is the Bollinger Bands, is it has one little aspect to it that I don't and I'm not able to see with candlesticks. All indicators that you will use, have used, or can use are entirely dependent on some form of price and volume. So as you see my chart right now, we're on Yahoo, ticker symbol YHOO, and notice this is oftentimes how I will trade my chart, just like you see it right now. So you see candles, you see some support resistance lines, you see a few triggers on the screen, and I keep volume here. That's really about all I do. I mean, 99.9% of my long-term, short-term swing trades is really based on this particular chart right here. Candles, volume, because really everything you're going to look at is based on those two very, very important aspects. So if you ever want to challenge yourself I present the challenge to try to trade or back test any of your strategies, your theories, any stocks you like with just candles and volume, not flipping to anything else and really asking yourself why. Why is the stock moving the way it's moving? Who is making money and who is losing money? Why would people be buying where they're buying? Why are people selling where they're selling? Who is buying and selling where they're selling and why? Just telling the stories back and forth between who and why. So let me give you an example. Who? Let's talk about the who. Who do you think sold today on Yahoo, creating this upper shadow? Who do you think sold there? Because we know for a fact that someone sold there because we have an upper shadow. So there's going to be some who. So who would it be? I think this is a pretty easy answer. The answer would be anyone who bought back in here. Profit takers. Yeah, it could be anyone. Doesn't matter when they bought, but we know that there's an upper shadow today on Yahoo, so we know that there is some selling pressure. So it could just be as simple as chart just died. Could be as simple as whoever had bought in previous to where the stock is now could be receiving profits, and therefore they're locking in those profits by selling. So let me go ahead and open up Yahoo Chart again. This is on our Trading View. So if you guys have Trading View, or if you want to follow us on Trading View, feel free to. It's a nice little aspect to it. But that's what I often ask myself is who's making money? Why would they have bought there? Why would they sell here? Who's buying? Who's selling? And looking very, very intently at the gaps on the chart. Gaps can be very, very significant. So as soon as Trading View loads here, we'll move on. But while that's loading, let's go ahead and do another poll. Have you guys ever used Bollinger Bands before? Have you ever used Bollinger Bands? Yes or no? And Angie's here. One of the reasons I invite Angie, well, there's multiple reasons I've invited Angie, but one of the reasons is because she does like Bollinger Bands a lot. She does like, is that grammatically correct? She do like? Yeah, she does like Bollinger Bands a lot. And I do too. I mean, of the indicators, they are a very nice indicator to use. Trading View is still loading here, so perfect time with the vote. So I'm in the voting, and I'm going to share the results. And you guys should be seeing the results. Here you go, my recording students watching this on YouTube or in the future. Where did those results go? There they are. All right. So that's the results of the poll. And 76% of you guys voted. 70% said yes, 17% said no, which is actually more than I thought. I didn't think that there'd be that many percent with a no. Pretty nice. I like it. Pam says, TD Ameritrade chart sets it up. I do not know what the correct parameters are to set it up. Nice. Very nice. Well, I will give you my settings in just a little bit. So hopefully that'll help, and I can let you know how you can set it up and how you can edit it. Because, again, it really depends on your broker and your charting software and all that, what the settings are. So what we're going to do now is I'm going to go ahead, and we're still looking at the Yahoo chart. I'm about to add my Bollinger Bands. I'm going to come here, and here are Bollingers. So first of all, let's go ahead and talk about the Bollinger Band settings. Let's just go ahead and get that out the way. I think that's a pretty simple thing to do. So the Bollinger Band settings I use in Trading View, for those of you who may or may not have Trading View, there's a little eyeball right here that you can click on. It's right there. You can say show hide or format, little cogwheel. You can click on format, and this little box will pop up. And it has style and inputs. So this is very easy, again, for those of you Trading View. If you don't use Trading View and you use another charting software or another broker, it usually is very, very simple to either right click or change the settings or change the preferences. You can change the color to whatever you want. Obviously color doesn't matter, just change whatever color you want. You can do the thickness, all that kind of good stuff. The inputs though, I think this is probably the most normal inputs on Bollinger Bands. These are the most common. You are basing it on the 20 moving average. Okay, so the line in the middle, this little orange one, is the 20 simple moving average. The 20 simple. So how it says source close, you can click on there and you can change it to open high, low, close, high low of 2 days, high low of 3, high low, open high low, close of 4. You can pretty much do whatever you want. depending on your broker and your charting software, you can have really a mass variations of changes on your source. But you normally would do the close because that is the simple moving average calculation. So that's the settings. Right here where it says standard deviation, the most common number is 2. You can do 2.5. If you know anything about statistics, you can get really fun with some of your statistics standard deviations. 1.98, 2.618. If you do fib numbers, 2.5, 2.1, 2.2. It's entirely up to you what standard deviation you do. But again, the most common is 20 and 2. Pam, does that help your answer, or does that give you an answer to your question? I think is what I was trying to say. She says yes. All right, fantastic. So those are the settings. 20, simple moving average, which is the middle line, and a standard deviation of 2. Let's talk about what the heck the standard deviation means and what it does. And this is one of the reasons I do like Bollinger Band as an indicator. John Bollinger, who is alive and well, and I am Facebook friends with him. So hey, John Bollinger. not that matters. He probably just accepts everybody, but anyway. He is a Facebook. He's a living, breathing human. He has webinars, and he really is one that created this indicator. I'd like to create an indicator one day if I ever become smart enough to. I don't know what it would be called, but I think that'd be kind of fun. So anyway, he created a band system that increases or decreases due to something called volatility. Volatility. Yeah. Increases or decreases based on volatility. So volatility, as all of you know, is really just the standard deviation of how far the stock will move over a certain time period. So if the stock is moving a lot, the bands are going to be farther apart. If the stock is not moving that much over a certain time period, the bands will be a little bit tighter. They'll be a little bit smaller. So notice right here in red, which was back in July 2014, the bands were not that far apart. And then back in here, the volatility was much, much more high on Yahoo. There's a lot of volatility in the market. Therefore, the bands were pretty wide. So the Bollinger Bands add a volatility component that not a lot of other indicators will use. Pat says, well, Newsome, what would your indicator track? Volume, price action, channel, true range? What's left to measure? I don't know. The amount of people being trapped, maybe. Maybe it would be like a combination of short squeezes, put to call ratios, maybe a little bit of volatility, average true range, size of gap, open short interest. It'd be a lot of things. But we'll see. It'll take some time before I do that, Pat. Trust me. Before I start building indicators. So, Bollinger Bands, volatility, sweet. Now, I actually am going to rate the 2 or 3, maybe even the 4 reasons that I use Bollinger Bands. My number one reason I use Bollinger Bands is much, much different than most people use Bollinger Bands. Most people use Bollinger Bands for something called the Bollinger Band squeeze. That is actually my number 2 reason I use Bollinger Bands. And let's talk about why. I'm going to go try to find a Bollinger Band squeeze here on Yahoo. I'm just going to look for a really good squeeze setup. Okay, this is probably a pretty good squeeze. So I'm going to show you guys a Bollinger Band squeeze here, here, and here on Yahoo. A Bollinger Band squeeze is when volatility gets very, very low, and at some point the volatility erupts and the stock moves pretty decisively in one direction or another. When volatility is low, the stock trades sideways for a while, and then the stock will erupt in one direction or another. The reason that I don't necessarily need or use Bollinger Bands for the squeeze is because if you turn them off, I could look here and say, you know what? Yahoo has traded sideways here for about a month and a half. It's going to break up in one direction or another. Here's a resistance. Here's a support. And once the stock breaks out of this resistance, I'm going to go bullish. Type in 1 if that makes sense. Right? Again, just using candles, support, resistance, and nothing else, I can more or less say, Yeah, the stock's been moving sideways, and whatever direction it breaks is probably the direction that it goes. I mean, that's simple. Again, right about here, you can see that the stock moved sideways, broke down bearish a little bit, and then it ended up retracing. Right, it went bullish. So that would be a situation where you go, okay, the Bollinger Band squeeze didn't really work there. Well, it worked here okay, it worked here okay, and it worked there okay on the bearish move. So I guess 3 out of 4 times on the chart, it worked okay. So you don't necessarily need to use the Bollinger Bands because you can say, hey, I can kind of see where the stock was trading sideways. Again, notice here and here. A little bit of a triangle pattern right there. Let's zoom into this price action because this is actually really beautiful price action right here. So notice this little triangle pattern. I'll try to draw it a little bit better. Bam, bam. Okay, white candle, gaps up. For any of you who have been watching or taking some of my classes, what type of gap would that be on Yahoo? That would be a retest gap, right? White candle, gaps up. Bullish retest gap. Right? White candle, gapping up. Because again, who? Who and why? Who's buying? Everyone who bought the prior day, right? Big white candle, someone bought there. We can tell that because there's a white candle. Stock gapped up. Who is selling? People who bought the prior day. Why are they selling? Because they're profitable. So you can see we actually had 2 or 3 retest opportunities where you could have gotten in on the pullback, and then boom, it continues. So again, that was a Bollinger Band squeeze that you could have played just looking at the candles and the chart pattern. But again, the volatility did get low, and it did get into the band, and it did continue higher. So I do like Bollinger Band squeezes, and every now and then, if I can't depict that it's squeezing, I will hop over to a Bollinger Band just to see what it's doing. It probably surprises me about 1 or 2% of the time. I'm not saying that because I'm a wizard. I'm just saying because if a stock moves sideways for 2 months, there's going to be a Bollinger Band squeeze because it's following the candlesticks. Let's talk about the number 1 reason that I use Bollinger Bands. Something called the Bollinger Band reversal. I do like the Bollinger Band reversal. Bollinger Band reversal is, there are actually 2 of them, and I'm going to be discussing both of them tonight. One is mine, meaning this is one that I teach, or one that I'm not saying I discovered this, but one that I personally feel is a little bit more powerful than others, and then I'm going to give you guys another one. So let's talk about the one that I use first of all. The first Bollinger Band reversal is you have 2 bands, right? You have a top band and you have a bottom band. If a stock gaps down and you open below the bottom band and the day ends with a bullish candle. Okay, so at the end of the day, you end with a bullish candle, can really be of any bullish candle, and it gapped down from the close of the prior day. That likely is a Bollinger Band reversal, meaning it will usually bounce, it will usually continue the opposite direction, or at least pause for a little bit. So let's talk about the 2 that I see right off the bat on this chart right here. Here's the first one, and here's the second one. So those candles, both of those candles gap down. Now, true, the gaps are very small. The gaps are not huge, but it does gap down. It opens and ends with a bullish day candle. They're both outside the bottom band, and you can see that a reversal did take place. Boom, boom. Could you have gone bullish there? Sure. Could that have been an indication to exit your bearish trade if you were in one? Sure. Could that have been a reason to be more bullish to non-directional, meaning you're doing put sales or buying shares and doing covered calls? I would say, yeah, I think those are all valid reasons. Let's kind of continue a little bit in Yahoo's history and move the chart forward if TradingView will allow me to do that. There we go. So I wouldn't personally consider this a reversal right there because, even though it obviously did reverse, I can see that, and we could have based that on the support resistance. It did not open below the bottom band. So notice this little candle right there did not quite open below the bottom band. Neither did this one, neither did this one. But again, Yahoo got in a little bit of a channel, very little profitable opportunity right there. This one, So this is a very recent move right here. That was for a nice little quick reversal. Again, stock gapped down and opened lower than the bottom band. So here's one and here's one. And again, even if it's just 2 or 3 days, it rolled over. I'm not saying you have to go bullish there, but what is helpful is if the stock gaps down, okay, and opens beneath the bottom band here, and you want to go bearish, you could at least say to yourself, all right, well, based on Newsome's reversal, it looks like the stock might pull in a little bit before it rolls over. And it did that in both situations, right? It reversed, it pulled back into the mean, and then rolled over. Now, again, could you have decided or depicted that without the Bollinger Band? Absolutely. I'm not here to give Bollinger Bands any credit. I'm just here to teach you guys how it works. I do like them, and I do use them every now and then. So here's a black candle gapped down. What type of gap are both of those? The exact same ones I just talked about. Black candle gaps down, black candle gaps down. Those are bearish retest gaps. Those are bearish retests. So both of them retested, and then both of them rolled over. So it's not massively shocking. You're like, whoa, I never thought the Bollinger Bands can do that. They don't. The price action dictates wherever the stock's going to go. But it could be one of those things you're like, I wonder if it opens below the band. And you say, oh, it did open above the band. All right, I'm going to make this an additional 1% chance or whatever that it does, in fact, actually trade bullish. Would that have been good to know, ladies and gentlemen, doing this little green 3 or 4 day bullish pop? I'd say sure. Depends on your time frame, I guess. But if you're day trading or short-term swing trading, each one of those moves was about 3 or 4% of the stock's value easily. This one down here in the bottom was 10%. Could have made some coin. I don't know. So that's the bearish reversal on using a Bollinger Band, right? So the stock is gapping down and opening below the bottom band. The other one I like is when a stock is gapping up and the stock opens above the top band. So again, case in point, here's the first two I can find right there, and there's your second one right there. Right, white candle, stock gaps up above the top Bollinger Band. So you can see those two examples, right? The candles are white before the stock gaps up. So who bought there? We don't know. Maybe it was your coworker, maybe it was your Aunt Sally, your Aunt Tina, Uncle Trevor, who knows? But we know that someone bought there because the candles that we're looking at on Yahoo are white. White candles, or if you use green candles, bullish candles show that people are buying. People are buying. Same exact thing happens here. White candle, gaps up. This one, though, did not open above the top band. So it was less likely that we'd get a little bit of reversal. So again, day traders or short-term swing traders, both of those were relatively decent opportunities to kind of take that trade bearish. So if you get a white candle and the stock is gapping up, you're likely going to get sellers. Why? Because people are locking in profit. If you get a black candle that gaps down, here's another one. Black candle gaps down, opens below the bottom band, and ends the day with a bullish candle. Who is getting out of that trade? Short traders. How do we know? Because the prior candle was bearish. How do they exit? They buy to close. Here's another example right there, the reversal that I'm talking about. Type in a 2 if that's kind of cool. If you're like, oh, all right, pretty sweet, pretty sweet. Yeah. So again, that's just one of those things where like, okay, if the stock is gapping, I might throw up the Bollinger Bands really quick just to see is it gapping out of the bottom band or out of the top band, and I'll kind of say, all right, well, there could be a little bit of a soft reversal here, even if it's just for a day or two or a week or whatever. It works. It works pretty often, actually. Here's another one. I don't know why I didn't see this one earlier, but look at that one. Oh, that's dirty. Dirty. Very nice white hammer candle. So again, you could have said to yourself, oh, it looks like a hammer candle anyway. This would have been a great place where people would have battled their wits' end on Yahoo, because you can see potential double top right there, right? It closed below the neckline. People would go bearish. But On the flip side, you can see that you got the white candle open below the bottom band. You got the hammer, then it pops. So really traps some people. And I think that's why the stock ran so much, is because people did go bearish right here, and they ended up getting trapped on earnings, and then the stock just took off from buying to cover. So the two scenarios, black candle gapping down, the stock opening below the bottom band and ending in a bullish candle. Stock gapping up with the black candle at the end of the day, and it opened above the top band. That's my reversal that I look for. I don't know if it's mine. I don't know of anyone else who teaches that specific setup. I'm sure there's like 10 or 1,200 others. I have no idea. I'm just letting you know that that's one of mine that I look for. The other type of reversal, this is one that John Bollinger himself has taught regarding his bands. It's called the Bollinger Band double top. As often as how he calls it, the Bollinger Band double top, or the Bollinger Band double bottom. Double bottom. Sometimes it's also called the Bollinger Band exhaustion. You can sometimes in some textbooks or some teachers will also teach it the same way. Bollinger Band exhaustion. So here is the Bollinger Band exhaustion or the Bollinger Band double top. Case in point, the trend is going bullish and it does not reach the top band. So there you go. Stock trades higher. Boom, 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 boom. Pulls back a little bit, trades up again, and does not reach the top band. If that happens, this little move right here is called a Bollinger Band double top. So notice when I say the stock doesn't get into the band, let's really zoom in here for just a little bit, and I'm going to use some interaction here. Ladies and gentlemen, is the stock inside the band right there, yes or no? Is the stock inside the band right there? And I would say, yeah, absolutely. It is. So you got the little light blue line. The stock pierced the band. It is inside the upper band, just like it is right here, just like it is right here, just like it is right there. Like it's inside that top band. So this is the bottom band. This is the top band. So it's inside it right there in pink. Okay. Then the stock has a little bit of a flag pattern, breaks out of the flag pattern, white candle gaps up. It's a bullish retest gap, kind of pulls back, retests, bounce, and then fails to pierce or get inside the top band, fails to push past the top band. Stock trades down. So you don't know that the trade is done yet. You think, well, maybe, because it failed to get inside the top band for so long, it might be done. Stock pulls up, fails to reach it a second time. Then this little bearish gap right here is the signification, at least in my opinion, that Yahoo is going to do one of two things. It's either going to reverse, meaning trade bearish, or it's going to trade sideways in a little bit of a distribution phase. And that's more or less what it did. So let's look for a few more Bollinger Band double tops. I'm sure I can find one or two. This one's kind of one right there. So you can see that stock trades up, does not get inside the top band, comes back down, comes back up, does not get inside the top band. And then right there when it gaps down, you would say to yourself, okay, well, this stock is likely going to trade sideways or not be bullish for a while because it didn't get inside that top band. So when that happens, you can usually say to yourself, okay, well, I don't really think the trend is that strong. I don't think the bullish move is going to be that strong. It's probably not going to hang out there for a while. Trying to see if I can find another one. I can find another one on another stock, I'm sure, but I can't find another one on Yahoo. At least not yet. Let me come back to present day Yahoo. So this is present day Yahoo. All right, ladies and gentlemen, so right here, and I'll zoom in here a little bit for you, did Yahoo get inside or pierce the top Bollinger Band all up in this area, yes or no? A lot of no's coming in. That's the correct answer. Yep, it did not. All right, so it fails to get in there, it fails to get in there, fails to get in there, fails to get in there, fails to get in there. So that shows a little bit of weakness to me. when I was looking at Yahoo at that point, I felt two things. I felt that it had moved pretty strongly bullish already. Really, this move in pink was about, honestly, almost 20% of the stock value, number one. And number two, it wasn't getting into the top band. So I wasn't totally floored yet on a bullish move. I was like, I'm going to wait. So obviously we can see that stock did pull back, and then it did end up getting into the top Bollinger Band. So, ladies and gentlemen, this little move right here, does that show bullish strength? Yes or no? I would say, yeah. That's exactly what it shows. Anytime the stock gets inside, pushes past, or pierces the top Bollinger Band, it does show a little bit of strength on the bullish trade. Let's dissect this a little bit more and ask ourselves, well, are there any gaps that signify strength on this trade? And here's a gap up, and here's a gap up. Both of these gaps are known as bullish retest gaps. So when both of these gaps occurred, stock pierces the top band all up in here. I was bullish on Yahoo, and I simply said, all right, I want to buy Yahoo when it pulls back, when it retests. And that's exactly what we did. We bought it on the pullback. In fact, let me go ahead and just pull up the Yahoo swing trade chart. For any of those in the trading rooms, we keep track of all the trades that we set up. So here is the chart. I'll pull it over just so you guys can have it. Now again, you'll notice this potential chart. I don't have any Bollinger Bands on the chart. Again, I told you guys earlier, I don't personally trade the Bollinger Bands often. I do it every now and then just to see, hey, what's it doing? So this was the setup. Again, chart pattern, you had an inverted head and shoulders, had a retest gap, and notice that said limit buy, right? I was waiting for the pullback on Yahoo. Pulled back, bought, had the stop at 30.78, and ultimate target is 45.73. So we can ask ourselves, does this risk to reward make sense? And the answer is, of course, yes. So now our stop on Yahoo is 32.05. So we've increased the stop about $2 and got rewarded very nicely today when the stock gapped up. So let's ask ourselves these 2 or 3 important questions. On Yahoo, is volume coming in? Yes. Did it have a nice gap today? Yes. Is it inside the top Bollinger Band? Yes. Ladies and gentlemen, what direction, bias, or trend would you say Yahoo is more than likely in at this point? Bullish. Yeah. It's a bullish trend, right? It's a black candle, gaps up, so it's a gap and go. It's trapping people. Anyone who went short yesterday is trapped. You have a lot of volume into the top band. So can we say in this situation we can have more bullish trades than bearish trades on Yahoo? And I would say absolutely. So we're in some shares on Yahoo. Those are looking good. And we also, and a few other traders, have a December put sale on Yahoo, which is an option trade. I'm not here to necessarily go into option trades tonight, but for those of you who may be interested or are like option trades, you can always go to our YouTube channel. We do have an advanced playlist where we talk about put sales. But bottom line, the traders who took this trade will make about 1% of the return on their investment in about 2.5 weeks, as long as Yahoo stays above 33, which could be a significant amount of money. You know, depending on the size of your account, I guess. But put sales are oftentimes my bread and butter. And even in August, when people thought, they called me crazy thinking the market was going to tank, and I got put a lot of shares of multiple stocks. As we all know, most stocks bounce pretty heavily after August, the little August sell-off, because the market's bullish. Anyone who tells you otherwise is just wrong. They're just wrong. The market's bullish. Bullish is the norm, right? It's always bullish. Anytime you're bearish in the market, it's only for the short-lived time. That's just my thought. So if you're always looking for the bearish trade, you're going to be wrong more than you're going to be right. Simple as that. Just my take anyway. So let's kind of recap just for the moment. We were talking about the Bollinger Band double top, or the Bollinger Band exhaustion move, as it's sometimes called, is when the stock is in a bullish trend, does not reach the top of the Bollinger Band on the second attempt. So if there's a Bollinger Band double top, if there's a Bollinger Band bullish exhaustion, what do you guys think? Is there a Bollinger Band double bottom or a Bollinger Band bearish exhaustion? And the answer is yes, indeed. Yeah. So let's do the flip side. Let's go and try to find where the stock doesn't reach the bottom band on the second thrust. Now, here's a good example right in here. So I'm kind of zoom in here for just a moment. So this is like a double reversal, if you will, right up in this area. Right, stock gaps down, it's a bearish retest gap, stock retest. You got a big hammer candle, it's a reversal outside the Bollinger Band. Stock trades up, pulls back down, and notice as close as the stock gets, it's actually trading parallel to the band. It never actually pierces it. Never actually pierces it. That would be an example of a Bollinger Band double bottom or Bollinger Band bearish exhaustion move where it doesn't reach the band. And you could say to yourself and save a lot of pain trying to take a trade, because look what Yahoo did realistically for about 6 months. Sure, there were some trades to be had in there, but that's pretty sideways. And this is the signal. That's the one. That's the signal that goes, hey, probably just better to wait on Yahoo at the moment. I would have said wait on Yahoo until you close below this wick anyway, which we didn't do until here, and then that was earnings, and gapped up, and then blah 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 blah. The rest happened. So again, for me to go bearish on a swing trade, I would have gone either way, because again, this is a very strong bullish candle, and that shows that there's going to be some buyers there, and the stock trades sideways for a long time. Here's a few other examples. So notice stock right there. Right here, doesn't get into the bottom band, doesn't get to the bottom band, doesn't get to the bottom band. Those are some other examples. Kevin says, do these work well with ETFs? All day, baby. All day. SPY is an example. Sure, we can hop over to SPY. So here's SPY. Kevin, what would you call this right here, brother? I'll zoom in a little bit for you, actually. Let me zoom in. You can see a lot of cases on the SPY recently. Now, this is back in 2014, but right there and right there. What would you call those two? Two things we just talked about tonight. Yep. Michael and everyone else is saying that would be a Bollinger Band double top. Yeah. So it's not a double top on the chart pattern necessarily. It kind of looks like one, but we can agree it's pretty ugly, right? Yeah, it's a little rough, especially this one. But we can say that the stock didn't get into the top band, right? So here's in the bottom, the top band pulls up, makes a second attempt, does not get into the band, makes a second attempt. So right here, could you have had the inkling or the idea or the possibility or the trading plan potentially to say, at this point, stock didn't get to the top band. I'm a little cautious. I think we might pull back. I'm going to buy some puts, or I'm going to buy some protective puts, or I'm going to do a covered call, or I'm going to get into a collar, or I'm going to do a bear call spread. Really could do all 5 of those option strategies. Or you could just have a bearish plan. Yeah. Because this candle right there, this little gap, that's a bearish candle anyway. It's called a new black crow. Do you guys know what a new black crow is? I finally had the opportunity to publish it. It took me until we formed my own company to do it, but I did it. It makes me smile. Makes me smile. If you ever get a chance, come to reallifetrading.com, click on education. You can hop down here. Candlestick ebook, totally free. I could charge $20 for that easy. Everyone does, but why? If you charge a lot of money for classes, you're probably not making money trading. It's just my thought. But anyway, I digress again. So there's the SPY, Bollinger Band, double top. Notice in here, in this location, it gets into the bottom band, comes back up, doesn't get to the top band, comes down, doesn't get to the bottom band. So that's when you're thinking to yourself, okay, this is probably going to be some sideways, pretty neutral. And notice how wide the bands are. A lot of volatility right there. Bollinger Band, double top right there. Bollinger Band, double top right there, right there. And here we go on the reversal. This is why, as much as I got punched in the face, which I admittedly did on a few of those days back on the SPY, there's the reversal. Stock gaps down, bullish white candle, ends the day with a white candle, is below the bottom band. That's when on SPY I said, all right, I'm thinking we're going to retrace, which we did. Didn't do a lot of trading in there. Traded this bearish like a wild man. And then stock reached support again. Had some nice gaps down here. That's the place to go bullish. I know you're saying, Jeremy, this is hindsight. Yeah, it wasn't hindsight in October, though. So, anyway. So let's look at what the SPY has done just recently. So, ladies and gentlemen, just recently when I was very confident that we would pull back, that's why. Stock never got to the top of the Bollinger Band. It traded and traded and tried so hard, but did not. Now it's pulled back down. We made a second attempt, and ladies and gentlemen, just today, we failed to get to the top of the Bollinger Band. That's why, at this point, I've drawn a little bit of a triangle, and I think December and maybe even January could be a little choppy. So if you have some shares of SPY, probably could consider a covered call, maybe a collar, maybe some bearish to non-directional trades, or just kind of wait for some chop to happen and then move on. Sell high, buy low, or buy low, sell high, either one. Pretty sweet. So let's do the flip side then. Let's talk about the Bollinger Band reversal on the bottom side. Again, we talked about that a little bit. We'll just talk about it a little bit more. So when the stock does not get into the bottom band, so this is DDD, right? So there's DDD. Obviously, this creates a nice little Bollinger Band squeeze. There's the Bollinger Band squeeze. And Bollinger Band squeezes are just like anything else. I mean, you find out what the stock is doing, and you see your support resistance. There's your support resistance on DDD. It gaps down with some bearish retest gaps. There's the retest, and there's the free fall. So Bollinger Band squeezes are really, in my opinion, kind of easy to spot. It's just when the stock trades sideways for a while. And then if the stock closes above a resistance or closes below support, you would go bullish just like any other trade. So it's really not that super special. But again, I like squeezes. You can scan for Bollinger Band squeezes if you want to. You'll get a lot of garbage stocks sometimes. And what I mean by garbage stocks is like $3 pharmaceuticals or just random stocks that you never heard of with low volume because they're not trading very much. You can always filter for volatility and average true range and all that stuff. With the right Bollinger Band squeeze, you can have fun. But here's the interesting thing, guys. How much do you think Bollinger Bands work on a percentage scale? Right about 50%. That's about the stock market average, is about 50%. Pretty much whatever you're trading works about 50% of the time. That's why risk mitigation is so important. Right? If you win more than you lose, even if a 50-50 trader, you can still make money. So that's kind of cool. All right, sweet. So we talked about the squeeze, which is really my number 2 favorite reason to trade or use the Bollinger Bands. Number 1 is the reversals, right? The Bollinger Band double top, Bollinger Band double bottom, and the reversals. I don't really have a name for them. I really don't think it. I didn't come up with it. I'm sure there's someone else talks about it. I've talked about it every now and then, but you can just call it the bottom band reversal or the top band reversal if you want. Number 3 is, again, pretty obvious. Not really groundbreaking, but it does help. It's called the Bollinger Band trend trade. And the Bollinger Band trend trade really factors in gaps and moving averages and everything else that you would normally factor into a trade. But that's when you use the middle band. I think Joe was asking about this earlier. You use the middle band as a support and or resistance line depending on what the trend is doing. So if the stock has some nice gaps, so let's look at DDD right here. Okay, so there's your little support line. Stock has a very nice gap down right there on 427, trapping some people. Stock gets inside the bottom band. Now you have a Bollinger Band trend trade. Okay, comes into the 20 acts as a resistance, it fails. 20 acts as a resistance, 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 and it keeps trending. Keeps trending, keeps trending. Hits the 20 again, fails. You guys can see that it just kind of follows the band. Now, again, if you're saying where would you use your stops, where would you stop out? In hindsight, it's very, very, very easy to use Bollinger Bands. So let's not use them in hindsight. Let's go to a stock that's trading right now and ask what we would do on that stock. So I'm going to go ahead and throw out a stock my way. Oh, what's up? Daryl Marshall's in the house. What's up, Derek? I mean, not Derek, Daryl. Sorry, there's a Derek beneath you. Daryl Marshall. What's the stock right now that you guys want to look at? Any stock? Go ahead and type something in. LinkedIn. All right, LinkedIn. So let's talk about present day stuff. So LinkedIn. So LinkedIn was in the top Bollinger Band right there. Ladies and gentlemen, did LinkedIn reach the top of the Bollinger Band here? Yes or no? And the answer is no. Did it get into the top band here? The answer is yes. Should the 20 act as a support? It should, and it didn't, right? It kind of did, kind of bouncing here. So on LinkedIn, my analysis for a while, I drew this little pink line about a month ago. It's just kind of showing you the rotation I thought would happen on LinkedIn. It's coming into some support. I want to do a bull put spread on LinkedIn down here somewhere, but there's no money. So right now, the Bollinger Bands are trading sideways, which shows what? Well, it shows that there's very low volatility. LinkedIn's been trading sideways for a while, and you could more or less have a Bollinger Band squeeze if LinkedIn keeps trading sideways about another week or so. And then from there, you more or less go, all right, well, if we close above this price, I'm more bullish than bearish. And if we close below this price, I'm more bearish than bullish. You kind of bracket trade the support resistance, and that's it. I know it feels a little bit simple, and depending on what stock you're looking at, it can also feel a little overwhelming. That's why I do like to narrow it down and narrow down our focus as much as possible to say it's really important to focus on candlesticks, gaps, and the asking, the who, and the why. But I do like Bollinger Bands, again, to see and to just add that little sprinkle of flavor, if you will, to my analysis. Maybe just some sugar, some salt, and pepper. Sugar, salt, and pepper doesn't sound good. I was just thinking about that. I think it's just salt and pepper. But anyway, we can take this line off if it helps you kind of see the squeeze. And notice, the squeeze is on. It's trading sideways a little bit, and that's a Bollinger Band squeeze on LinkedIn. Here was the most recent one I can think of on LinkedIn was right here. That was a really, really tight squeeze. Broke down bearish, hit the 20, failed, hit the 20, failed. But it didn't really do anything until earnings gapped down. Yeah. If you want to use it as a precursor for earnings, let's say you're looking at, let's say the stock is in a Bollinger Band squeeze and then breaks one direction before earnings. So notice, Bollinger Band squeeze, broke bearish. Maybe you hop into some puts before the next earnings. Right? Bollinger Band squeeze, it breaks bullish, hop into some calls before earnings. It's still a 50-50 play. It's still a 50-50, ladies and gentlemen. But right now, I would say LinkedIn is building for a Bollinger Band squeeze. Which way is it going to break out? I have no idea. This is a white candle, stock gapped up. This is a bullish retest gap. That's why I thought that it would retest. It is. And if we can do this and break out, ladies and gentlemen, would you be able to have and kind of anticipate and kind of build a plan for what direction LinkedIn might go based on the candles, the gaps, and the Bollinger Bands? What do you guys think? Yes or no? I would say yep. Absolutely. Let's go check out Facebook. Here's Facebook, and we'll use Bollinger Bands on the Facebook. Facebook got into the top band here, got into the top band here. Again, let's talk about simplicity. White candle, gapped up. Bullish retest gap. Here's the retest. So we're retesting. We're making higher lows. We're making lower highs. The top band is coming down. The bottom band is coming up. Shows volatility is declining, but we can also see that because Facebook's been trading sideways for a while. So if Facebook's trading sideways for a while, let's say it builds into a Bollinger Band squeeze and breaks out, obviously we trade it bullish. So you could say, Jeremy, what would you do with it right now? Well, ladies and gentlemen, is Facebook trading bullish or trending bullish? I would say short term, no, it's sideways. Long term and medium term, yeah. Type in a 1 if you hear me use the term bullish to neutral a lot. Probably hear me say that you probably hear me say that all the time in one of my stock reviews. Well, this is bullish and this is neutral. The neutrality is the last month that we're going on. Like if I got to pay the bills, I don't want bullish to neutral. Like if I gotta pay a car note next month, right? Because that's what real life trading is all about. Real life trading is about teaching and taking the stock market and paying bills with the bad boy. You know, making some money month in, month out, week in, week out, day in, day out, that type of thing. Longer term trading is one of the most easy things in the world, in my opinion. I don't think it's hard at all. Long term, short term, support, resistance, risk, reward. I mean, that's boom, you're done. So you go find a long-term trade on Facebook. Let's just go zoom out here and look at the long-term trend. And you can see long-term trend is bullish. Facebook has been going up. Of course, you're going to have dips that go down, but the long-term primary trend on Facebook, look at this, bullish. It's going up. So if I'm bullish, and if I just say, guys, I'm bullish, like not bullish to neutral, that's usually because there's a nice little gap like back here that traps people. So in this area, good to be bullish. That's bill paying move right there. That's what that is. This stuff right here, not really bill paying kind of move. And in all honesty, Facebook's not really a bill paying stock unless you're doing some strategy that involves neutrality. Throw out some strategies really quick that involve neutrality. And by neutrality, I mean sideways movement. Iron Condor, boom. That's a bill paying strategy. A bull put spread, absolutely. So remember I said bullish to neutral. Bull put spread, maybe you could do some put sales. Maybe you own shares and you're doing covered calls. So you use some of these strategies and some of this analysis and some of these indicators to say to yourself, all right, well, I think it's going to slow down a little bit. I'm going to hop into a covered call. Notice that's what one of my traders did. Stands in a January 120 covered call. Is he going to make a lot of money off of that? No, but he's been doing that since about $40. Recognizing when the stock is going to slow down and selling a covered call 2-3 months out, reaping the premium, and then moving on. So Facebook is, in my opinion, a bullish trend. Long-term and intermediate term. Intermediate term is usually a few months for me, so here's your intermediate term trend. So I'm all about buying the bounce on Facebook if it pulls back far enough. You could also consider a put sale around 100 potentially. So a lot of opportunities on Facebook. Last but not least, and then I'm going to send some links your guys' way and ask some questions and answer some questions. VMware. Let's look at the stocks. Let's look at the candles really quick and ask some questions. What type of gap is this right here? White candle, stock gaps down and opens below support. That is a bearish gap and go. Yep, bearish gap and go. So is that bearish? Yeah. Could you have the understanding to be bearish? Yeah. Do you need Bollinger Bands? No. Do you want to use them? Sure, you can. So you can pull up the Bollinger Bands and go, I wonder what it's doing. All right, so here's your Bollinger Bands. Bollinger Bands, we open below the bottom band, but we do not have a white candle. Therefore, I don't think it reverses, and it didn't. Boom, boom, pow. Now, if we're looking at this gap, here's another black candle. Stock gaps down. What type of gap is that? It's a bearish retest gap. Shocking that the stock is retesting. Even if it's a little bit, it did pull up a little bit. And there's your reversal right there. White candle, opened below the bottom band, ended with a bullish candle, and it retested. Any ahas in the building? That's pretty sweet, right? That's pretty cool. I mean, it could have helped you if you're saying, hey, I want to go bearish here. It could help. And I did go bearish on VMware right here. As soon as that support broke, boom, boom, boom. What do you guys think? Did I get stopped out? Yes, I got stopped out. Is that okay? Yes, because you got to mitigate your risk. If you get stopped out on trades, it's okay. It's okay. Stops will always happen. Stops will always get hit. Don't worry about something that's a guarantee. If something's a guarantee, why worry about it? You know? Like if it's a guarantee, if it's 100% like you know it's going to happen, why worry about it? It's a guarantee that you're going to get stopped out in the stock market. It's a guarantee that you're going to lose money on some trades. So don't let it stress you out. Take the highest probability trades And the way I find short-term, high-probability trades is look for gaps that are trapping people. That's what I do day in and day out. Otherwise, if it's a longer-term trade that I'm just going to hold in like a long-term account, gaps may or may not mean that much to me. Like if it's an Apple, I'll buy Apple whenever I get a chance to buy Apple. If I have enough money to buy Apple, I'm going to buy some Apple shares. You know? Because it's Apple. They have $189 billion in cash. So, I don't know. It's kind of sweet, but just something to consider. Jason said, hopefully it was recorded. Everything's recorded that we do, brother. It's all recorded. Pam says, do you use Bollinger Bands for the daily charts or for 5 minutes and 15 minutes? I use my Bollinger Bands for my daily charts, Pam. I don't use them for intraday trading. If you do use them for intraday trading, I have a little bit of a smaller, tighter standard deviation. You know, so you would use a smaller standard, a tighter standard deviation, so your bands are a little bit tighter and a little bit more sensitive. But I personally don't use them for day trading, no. If you want to learn how I day trade personally with real money, hop over to the website. It's a pretty cool website. It's called reallifetrading.com. And you can click on the educational tab and click on where it says day trading. And all of these videos are entirely free. And this really is, seriously, no holds bar, no sales pitch. 4 hours, you're out the door. We'll teach you how to day trade. George says, how does Keltner channel differ from Bollinger Bands? Great question. The Keltner channels does not factor in volatility. Very, very valid question, but that's kind of what made the Bollinger Bands the Bollinger Bands. They factor in the volatility. Vinny says, people need to realize the value of the content on your website. It's huge. Appreciate that, Vinny. Thanks, man. It's pretty powerful. And there are a lot of videos, by the way, on our website that I haven't stored yet because there's so much. I actually don't want to overwhelm people. You can go to YouTube and type in our real life trading, and there's even more videos on here than is on the website by like a lot, because we can hold them all on YouTube. So you can click on real life trading. If you guys don't subscribe to our YouTube channel, go ahead and subscribe. We have 1,600 subscribers. I'm really excited about that. But if you click on our playlists, we have a lot of cool information. There's 16 videos on the advanced strategy information. Financial fundamentals. I don't know if you guys heard about this, but this is one of the greatest content classes I've seen created. Brad Reed created them. 12 videos. Really, 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 really awesome stuff. Everything from longer term retirement to getting out of debt. Here's some of the trading floor videos that I've released. Here's our day trading videos, Mentorship Monday videos. This will be updated soon. Stock reviews. Anyway, so it's all there. But it's a lot on there. So I try not to overwhelm people. This is what you need to know. Right? What's on the website, Polly, is what you need to know. If it's not on the website, you don't need it to make money, I guess is what I'm trying to say. All right, second link. Check this out. Let me see if I can post this. I can. Ladies and gentlemen, this is one of the first live classes I've done in a long time. It's not one of my trading room classes. I just posted a pretty big chat block in your chat pane. That is for the first trading open house to our trading floors in a very long time. We do not do them very often because I truly feel that our trading floors are very, very viable. We trade every single day, and we're already at 6 Rs this week in the trading rooms. Everything else on the website's free. So I figure we're going to charge for the trading rooms for a multitude of reasons. Number one, really, if there's a lot of people in there, it can be overwhelming for people who aren't trying to trade or trying to ask questions. But anyway, if you want to be there, the first week in January 2016, these links will not be emailed to you because I can't. So copy and paste the ones in the chat pane. They're right above you. Copy them, hold on to them, or you can click them right now and register, and you will get registered for the first ever 2016 open house in the real life trading floors. There's going to be a lot of people there. Make sure you register. We will remind you, all that kind of good stuff. One last housekeeping link, if you will. This is just for fun. I have a lot of day traders out there. Some of you like to day trade, some of you don't like to day trade. Some of you just like a hoodie. we've just created a brand new line of real life trading hoodies. If you want one, we have a 13-day 13-day window. It says day trade and chill on it. It's a hoodie. The winter's coming up. We like to stay warm when we trade. It's a good stocking stuffer. If you have any traders in your life, if you want to get one for yourself, great. If you want to get one for a spouse or friend, it's pretty sweet. And anyway, a lot of people bought some merchandise last year about the same time. I really appreciate that. Thought we'd come out with another funny and cute one, and you can check that out, that link. Otherwise, ladies and gentlemen, I've taken up 60 minutes of your time. I really, truly do appreciate you being here. If you're live or if you're watching the recording, again, please make sure to tell your friends about real life trading. We have done, ladies and gentlemen, I want to make sure you guys are aware of this, and this is all entirely thanks to you. So take in for a second how awesome you are. Let me tell you how awesome you are. Real life trading has done what no other company in the entire industry has done. You guys ready for this? Given away all of our education for free and lasted more than a year. How incredible is that? When you can trade, it shows. Ladies and gentlemen, I'll see you later. And until next time, remember, love life, live life, and trade it. I'll see you.